What's up, guys? Give me 1 second. What's going on? What's going on? How's everybody doing? Just give me 1 minute. I'm going to put the chat on the screen. Cool. Let me set up everything up and to the right when I'm on this screen so that I could talk kind of directly to you guys. Because of my setup, the camera's a little wonky because I have pretty big setup. I can't have the camera right in front of my face, so I have to have it off to the right. What's going on, guys? So how's everybody doing? Welcome to the stream. We'll get started in a minute. Just give me a quick sound check. Background noise and mic volume. Kaleo is right. Yeah, Kaleo's smart, man. What's up? What's up? What's up? Hey, everybody. I'm not gonna bother going through everyone's name because I'll just mispronounce them and just go on forever. Good to see some familiar faces. You know, I'll just say things like that from now on. Good to see some familiar faces. Might not be anybody familiar, but I'll just say it. Cool, sound is good. I'll turn that background noise down a little bit. Lying after a huge workout. Nice. Yeah, I figured the music was a little too loud, so let me turn that down a little bit. Okay, cool. So, how's everybody doing? Gonna try not to take too much of your time before we get started. Obviously, you know, formalities. Ryan's mic, okay, background noise. Okay, it probably should have caught up by now, Hans. Good, cool. So anyway, remember, none of this is financial advice. Strictly for entertainment purposes only. For those of you that are not subscribed to the BlockRoots YouTube channel, please do subscribe, hit the like button. I go live now every Tuesday and Thursday at 1 p.m. Eastern Standard Time. So make sure you hit the like button, make sure you subscribe, put us on alerts. Myself and my partner, Josh Rager, we are the co-founders of BlockRoots. And we have some things that are coming down the pipeline in the next month or so. So, you know, we want you guys to be aware of those as soon as they release or as soon as it releases. It's a project we've been working on now for the last couple of months. It's taken a little bit longer than expected, but nothing good comes fast. So make sure you put us on alerts, subscribe, all that, yada, yada, yada. Again, none of this is financial advice. And lastly, if you're interested in any of the platforms I use, or rather platforms I recommend, order flow platforms I use, there are some links below. We are partners, obviously, with Phemex. So if you use the link Phemex.trade, you'll have access to their spot, derivative, and yield market, and it's no KYC. So no KYC up to 2 BTC. So that being said, I have a few things I want to talk about, or rather touch on. Pretty big move today. That 1 hour candle that we closed out more recently, that was the largest candle buy volume this year. So largest 1 hour candle buy volume this year. So quite significant. Right into a stack of bids that have been layered below us on Bitfinex, and it looks like that entity actually had intention of getting filled, so it's not like that was yanked or any kind of psyops or a spoof. More often than not, Bitfinex, with respect to larger presence within the order book, it's been the case that they've actually had intention to get filled. So it's not often that we see, whereas like if you're looking at other heat maps through other exchanges, where maybe the amount of bids or asks are usually a little bit more isolated to a tighter region. With Bitfinex, we see that when there's a significant amount of bids or asks that are layered throughout a region, that they actually step in the way of price. And more often than not, actually, again, like I said, have intention of getting filled, which is one of the more important things to distinguish if you're looking at heat maps. And heat maps are not something that I really prioritize, period. But whenever Bitfinex is active in the order book, it's something that everyone is paying attention to. Okay. And we know that Bitfinex is sort of home of the whales. So some news to touch on, things that are worth paying attention to. Coinbase earnings coming up. So Coinbase earnings coming up, and let's just hope that they don't have a Netflix moment. Terra Foundation, so Luna, Do Kwon, actually ended up purchasing another $1.5 billion worth of BTC. So that was either announced, was that announced yesterday or was it announced today? I can't quite recall. I do happen to have a friend who corrected me when I posted not too long ago about the wallet not accumulating any more BTC. It's good to know people on the inside had told me that they were clearly not using the same wallet and that they were actually in the middle of purchasing. I won't say who this person is. They're a valuable resource, but Genesis actually ended up picking up most of the bill, so about a yard worth of BTC. And when I say yard, that's $1 billion worth of BTC. They use, a combination of bots and actual, buying for the Luna Foundation. Most of this was done through OTC swaps, so $1 billion worth of it from Genesis, and then the news that everyone is concerned with is $500 million of BTC from Three Arrows Capital, so from Sue and Kyle. Now, the first assumption right away, and sort of the knee-jerk response by the market, is that 3AC dumped on us, because if the Luna Foundation is buying Bitcoin, then 3AC is clearly selling it. Why would they want to sell it if they've been bull posting, yada, yada, yada. It's entirely possible that 3AC just was who the Luna Foundation sourced their activity to. So, if you're OTCing and there's not, that amount of BTC or whatever asset you're looking to purchase, if there's not that amount available for a swap, then it's sourced to an exchange. It's sourced through a desk to an exchange, and for example, Coinbase is one of the more popular exchanges for any kind of United States activity, and it's bought through the exchange. So this is where everyone gets horny over the concept of a TWAP, because this is one of the more popular methods to accumulate a large amount of a large position, whether you're talking about Bitcoin or anything else, as long as the market is liquid enough. Otherwise, it's not really an optimal method to pick up a large amount of anything. So you have to have a thick market. So it's very likely that 3AC was just essentially contracted to actually place this order, right? To acquire this BTC. Maybe, Luna Foundation allocated, or rather considered, that the $500 million of BTC, was worth sourcing out to 3AC, and 3AC in some fashion or form was able to efficiently acquire that on the market. So that's $1.5 billion worth of BTC bought, but today, we're sitting down significantly lower. So yesterday, and then we'll get right into the charts. Yesterday was the FOMC. Okay, so we got the 50 basis points. One thing that was very significant that did provide us a little bit of a leg, but obviously not much, because we're sitting much lower now, is and I posted about this yesterday on Twitter. So the actual rate announcement, so 50 basis points, that was at 18 UTC. So that is 2 p.m. Eastern Standard Time. The market is anticipating this, right? So this was the highest probability outcome. So this was the outcome that you could assume was the most priced in. It was good, right? It was positive. It wasn't 75 basis points, but it was what the market assumed was going to happen. It was within expectations. So you did get some unwinding of anyone who was positioned in anticipation of downside, anticipation of maybe a negative reaction, or a higher rate hike, higher increase. So some of those unwound. We had to move up, and then we were taken just until the conference. And the conference is really where you're going to have a lot of Powell's language broken down and interpreted, and you're going to see a lot of algo activity, and that's where you should get a really solid and significant move. This was at 2:30. So remind you, going into FOMC, going into CPI, something that I always say: never trust the first 30 minutes, right? Fade the first move, never trust the first 30 minutes, And the second move after the first move is usually the one that has more legs, right? So I went over that whole game plan. We're gonna look at the chart and see exactly what happened. But Powell's speech, his language, it was frustrating because you have reporters that are really just trying to generate attention, generate a headline. So you have them continuously asking questions. The market's doing well, and you're thinking like, please just shut up, right? Don't ask something that is going to warrant a response by him that might be interpreted by some, haywire algo and sends a position against us. But I had posted, and then almost immediately after, right, I had posted, someone needs to ask him about the 75 basis points. That was sort of the elephant in the room, right? The most significant thing out of this was, okay, the market was already pricing in 50 basis points, but what is going to be the rate of QT, right? The rate and intensity of QT in terms of how fast and how much they're unwinding with respect to their balance sheet. And that didn't particularly fall out of line with what expectations were. His language, though, was repeatedly, it was more hawkish than anything else. The phrase or something similar along the lines of, we have to combat inflation. It's our most important cause. It's our most, significant agenda. That kept getting reiterated, which was also said alongside comments that were, highlighting the strength of the economy, the tightness of the labor market, briefly touched on GDP, but no real harping there. So it was more hawkish than anything, but the 75 basis points was really what the market wanted to clarify. And sure enough, a reporter asked right after, and he said that's not something that they're considering. Doesn't mean they can't pivot, but that was cleared up right there. So the market had, a very positive response to that. Clearly, we've had a significant unwind. Now, I'm going to take a look at the charts in a second. We're going to go back to that moment, sort of see how things transpired, and then we'll obviously touch on where we are right now. But as you can imagine, just consider this. The market has been pessimistic for some time, but the expectations were that we were going to get a 50 basis point hike. So if you looked at Fed funds futures, if you were to look at your social media, that's all you really need to look at, because everyone was reiterating the fact that expectations were 50 basis points. It was expected, right? It wasn't going to be anything that really caught the market off sides. It was positive because it wasn't worse, but still it was within the realm of expectations. So you have people that are, again, we saw leading into this, both sides getting a little active. You have some shorts that are going to unwind, right, that are off the ball right away. But then once you have this positive news and then the 75 basis point comment, as you can imagine, a significant portion of the market just immediately flipped bias, right? Even myself saying that I was picking up longs and looking to buy any kind of small dip. And this morning I posted that I was flat, and thankfully, because we dropped another 6% right after that. But this brought a lot of activity into the market. It increased positioning, and it created a lot of crowded positioning in an area that was already extended and for the most part imbalanced. So let's take a look at the chart. I mentioned that I was going to talk about these for a second. So I ended up getting the Apple AirPod headphones. And I really like them. Sim had said that they're winter headphones, and that's an interesting way to characterize them. They are a little bit abrasive, so I actually mow my lawn with these on. I've done it. I mowed my lawn with these on. I like to mow my own lawn. We had landscapers. I like to mow my own lawn. It's a big ass lawn, but it allows me to listen to like some kind of podcast or spend at least 2 hours of the day doing nothing. It's kind of a form of meditation, if anything. I really like these. It was a little sweaty. They're a little bit abrasive in the gym. I noticed that yesterday. I don't wear them in the sauna, but I did notice it when I was working out with them. It was a little sensitive around my ear afterward. But I think that I could deal with that. I really like them. Sound quality, I couldn't tell you. I'm not an audio specialist. But what I did notice was, in my opinion, I could be wrong. My ears could be wrong over time. But I am getting older, right? I had the Sony WX4000s or whatever. My dog ate those. My dog ate my wife's Beats. And these have not been eaten yet, and I think they have better noise cancellation overall. I just love Apple products in general. So yeah, it totally is, right? It totally is men's therapy. I mean, I might end up having, so the thing about the long guys is they're not really, they just kind of show up when they want. We've had them before. If I'm in the middle of, like, let's say it's happened before, I've been in the middle of a stream. You guys remember, like, over a year ago, been in the middle of a stream, and I am on one side of my house right now. I'm not near my backyard, but I'm in an area where they cut through, and there's a pretty big garden on the other side of this wall, and there's an area that they would clean up, and it's possible that I'll be in a stream and they'll come and distract me, and I don't know. I prefer to do my own lawn, and I prefer to do a lot of things, unless it comes down to plumbing and electricity. All right, so let's take a look at the charts. So do we have any questions off the bat? I just touched on a few points in the beginning, but I want to make sure that you guys are following along, and we'll take a look at the charts now. Just go through here. Yeah, that was a picture of me. That was like 2 years ago. Compound lifts. I build a program around deadlifts, rack pulls, and overhead press. Okay. Beats, man. Not beats the plant, but beats like BEATS. Headphones. Headphone eater. Ate my new book too. I planned on reading a new book over the weekend. She ate that too. All right, so let's take a look at the charts. Switch it up. Make sure that my screen is still following along. Okay, so the first thing I just want to look at is how the FOMC. First, I touched on BIFNX, obviously. So here are the bids that I was referring to. And this is what I was referring to with respect to BIFNX and how bids are layered on this exchange and what we've seen in the past compared to, like your Binances, your FTXs, Coinbase, where, those you might have a very tight pocket, right? Something like this. These are, just different tranches maybe. FTX is a little bit more isolated, a little bit chunkier in a given region. I could go back and I'll give you an example right here. So here's FTX. They'll have a little bit more presence in a tighter region, whereas BIFNX is a bit more spread out and tends to actually be interacted with. So, on Binance, on FTX, a lot of times you'll see a significant presence in either the bid or the offer, and they might not have any intention of getting filled, right? They actually might be keeping prices suppressed in one direction or the other to possibly, either exit a position in the spot market or enter a position in the derivative market, and use that to more or less cap activity. BIFNX seems to have intention of getting filled, right? Every single time the bids are left there, they are filled. You see that there's actual interaction with them. They're sold into in this case. You could look at, for example, the change in open interest as we move down into this tranche of bids. And I think what I'm trying to sort of convey in the description is you'll notice a difference in what BIFNX has looked like compared to other exchanges, just with respect to how these layers have appeared over time. So you need to turn down the sensitivity if you're looking at something like Trading Light to pick up on them. But it's a very significant presence. They have been filled in the past, and this has been able to previously, we're just going based on what has happened in the last couple months. It has been able to mark highs and lows. So with a fair degree of accuracy, we've seen that this buyer and this seller have been correct with respect to direction. So this is not something I want to put too much thought into, though, but it has been sort of a talking point because there could be a completely other side of this order that's being executed on another exchange. This could be a complete psyop. You never know. But back to BTC, just for the FOMC activity. So here is the announcement. So you can see the time, So the green line right there, the first move, right? Fade the first move. So I said that I always want to try to join the first move immediately. This was a completely different set of activity than we've had in recent FOMCs and CPIs and non-farm, I would say non-farm payroll, but that hasn't really been that significant for BTC. But the level of volatility just across the board wasn't really there. So I said initially, the first move that price put in with the level of conviction, in this case, we actually ended up getting a move to the downside initially. So these are 15-second candles, right? We had a move to the downside initially. I ended up trying to short this right from the get-go. So I said I was looking to join the first move, meaning instantly join the first move. I probably got out around break even, probably lost some due to slippage, but I did enter in this immediately thinking I was going to get what I expected and had talked about before, which was getting involved in the first move and getting out mechanically and looking to take at least 100 to 150 basis points off the table. So what I was expecting from this was, from the origin of the move right here, I was expecting at least down to, let's say, 38,300, right? So around 150 basis points. So immediately price reversed, and I got to say I hammered long right away. I was anticipating that we were at least going to get some kind of leg from the get-go. I don't like to, trade like this necessarily, where you're getting in and getting out in the opposite direction immediately. But I thought, okay, maybe this is the first fake out, take some lows leading into this, and then we'll have that first extended move. Okay, so it ended up joining long right away, flip short, holding on to this position just for a little bit. And it was not necessarily a very pleasant trading a pleasant trading session, because I had flipped short, I had posted that, and then just closed this out for a few points. It didn't seem like what I was expecting was, and this is the entire first 30 minutes right here. So let me just pull open my drawing tool. One sec, where are we? So what we're looking at is the first 30 minutes. So from here to here. What I was expecting, right, if this wasn't going to be the first move, what I was expecting was at least this, and then something more along the lines of this, right? Something that immediately took both sides of the book. And instead, we basically spent, if you look at the FOMC opening range, if you're just going to consider maybe like the 30-second or, 1 minute opening range, we didn't even really leave that. And that's that opening range right there. That's what I'm talking about. This is 15, that's 30, this is 1 right here. So it's basically, you're looking at 1 minute right there from low to high. So we spent the entirety of the 30-minute range for the most part, or 30 minutes after within that range, which is, it's uncanny behavior for some kind of event like this. But the market wasn't necessarily that one-sided leading into it, whereas I had talked about sort of my playbook leading up to the FOMC in my last stream. I had said, into the last FOMCs, we've had, the S&P leading, BTC leading in certain cases directionally, at least one way or the other. Whereas this case, it wasn't necessarily that. So flat activity, nothing really exciting whatsoever. Okay, but nevertheless, there was some level of direction. We could sort of say that this was overall trending down post-announcement. Right, you had the first move up, and then overall we were trending down. That's outside of the first 30 minutes, we actually had somewhat of a trend. Right, so for the this is going on just in terms of time, how long this occurred. We had we had a half hour of direction before the market immediately settled. So this was a very anticlimactic session for what was, completely built up leading into this. I was anticipating a lot more activity. I was excited for this, thinking that there was going to be, a very great, a great trading session ahead. And I ended up taking what was two decent, 3 or 4 trades on it, I think, because I ended up closing it out and getting long again. But for really nothing, for scraps. It was a good session. It was worth protecting today, but this was definitely not the kind of FOMC that we expected. Now, this was the 30 minutes after, right? This was when Powell announced, this was the conference in which Powell announced that we were going to get, or rather that we were not going to have any 75 basis point hikes. So the market was one-sided during that. But again, there was no real follow-through. No real follow-through at all. Price stalled. And I ended up getting a little bit long up here, right? So I was long during this, ended up building or what I anticipated building a longer swing position that I assumed would probably just tap into this gap. Placed bids, filled one of my bids, and that's where I second guessed this morning and actually cut the position. And I had cut the position up here, and we ended up taking all the lows. So it was a very, as I mentioned it was a very anticlimactic FOMC. And the positive news that we had, it looked like the market was just it had already priced in that 50 basis points. And the positive news that we had was not even enough to warrant any kind of longer trend. I mean, we completely collapsed this entire structure. Now, just to be transparent, I'm actually long again from down here. So I'm long again from down here, and that brings us to where we currently are, which is probably a little bit more exciting to talk about because we all lived this yesterday. But here's the thing. We ended up having a break of this inside month structure. So I've been talking about this for the last couple of days, right? So inside month structure completed. So that is that low, that high, right? Broke that low. Did not get any kind of follow through, but we're at the lows of the range, right? So if we look at where we are right now, this is the value area low of this year, the value area high. You can see that we're sitting right at the lowest weekly close for the first quarter. So this level right here is the lowest weekly close for the first quarter. Put this chart on to make a little bit more sense. Where we blew through, so where we had that big candle through. So remember what I was talking about in the last two streams. I said 37,000, I was going to say 100, would be ripe with liquidity. And if you look at this on a very low time frame chart, if we go down to like the 1 second chart, you can see things are very tight leading into that low. So we'll mark off 37. So right, close enough. Things are tight leading into the low, and then immediate expansion once we break below. So the idea behind me saying, 37, break of 37 would move very quickly. And in the case of Binance, where most of the open interest is, we broke from 37, or once we broke 37, it was a very quick trip into the 35s. That was an area that had been ripe with liquidity because, as you can imagine, there's plenty of stops that built up around a multi-day low, right? So multi-day low going back to right here. So you can see that green line that I just put, that should be right around 37. We're talking about all of these lows that were uninterrupted from the period of the end of February to mid-March. So it's never really a good case to step in the way when you have lows that are very close and you don't have one. A different situation would be if we had a low like this, and then we had one low that took both of those lows before creating the trend. In this case, you have uninterrupted low, slightly higher, uninterrupted low, slightly higher, marginally higher lows, and it's just easy for this region to accumulate a bunch of stops, right? So this is never the low to step in front of, and we've been hanging around that low period, but you want to wait for some kind of flush. So we flushed. We didn't have any kind of further breakdown. We're at the lows of the range of the first quarter, right? From a weekly closing basis. We're at the lows of the value area for this entire structure. So if we place the profile on, put a quarterly profile, you can see we're right at the value area low of the first quarter. So the market is not exciting. It's just ranging, right? It looks like you're going to get a trending move. We have a, who knows how many sigma move into the low. And it's probably worth fading because we did not break through the low. This did not involve any kind of follow through. We had a 4-hour close below this level, no immediate response, no immediate continuation. Right now we're looking at 6 hours, 6.5 hours from a daily close through this micro range, but we're still holding the lows of this entire structure. So I guess what I'm trying to reiterate is nothing has really changed, even with this big candle. So even the fact that we've had a candle that is the largest candle of the year, and it looks really ugly, it's just doing what it has been doing this entire time. So it's really easy to get wrapped up in like what has happened in the last few hours, but because you're sort of already out of the emotion of everything that's been happening, very similar to that already. So it's not like, again, this is a ranging market. I think that my anticipation was 37 could have led to a move lower sooner, but you're already seeing, if we look at open interest, that into this low, we had a increase in open interest, a big wipe. So it looks like, honestly, I was looking at this, waiting for a flush, right? I tweeted right around here, open interest increasing on this, but I would wait for a flush of the lows. You finally do get that flush, and it looks like a significant amount of whatever positioning was getting involved here was wiped out. So, a fair amount of longs. You have some shorts closing, and then now throughout this structure right here, you're starting to have a delta divergence, basis being really one-sided with respect to in terms of derivative exchanges to spot exchanges. So derivative exchanges trading much lower than spot exchanges, you can see the funding begin to flip. Now, funding is not that important, and that's why I haven't been harping on it recently, because the market is not liquid, right? So in an illiquid market, and I've probably said this for years now at this point, funding is not as important when the market is illiquid, because it's going to give you a lot of false signals, right? The funding is a mechanism in order to keep the markets in line, and when you have thinner markets, it's going to be harder to keep the index and the actual derivative price in line. But more importantly, right, we have a small range that's forming. So I'm just kind of going to try to make this as obvious as possible. So we have the largest hourly candle of the year. We have a decent amount of liquidations, nothing major, but no major increase in open interest, more recently anyway. And then most importantly, this is what I want to point out. So let's just take it back a notch first, real quick. The last time, so we talked about this. This is the exact same thing that happened. It just happened last week, or maybe this was 2 weeks ago at this point. So you have, and this has happened a few times on the lower time frames too, but the market looks like it's making a move strongly in one direction, trades above a prior range, right? Trades above a prior area of structure that had highs and lows that were pretty decently capped, right? So you're looking at what? Possibly a trending market. The top side of this structure should act as support. You have the making of change in market structure on the low time frames, and it said the market nukes through that entire structure. So the first order of thinking is now this has to be really bearish, right? Because that was all done away with in a short amount of time. Same thing happened back here. Market reverses course. Looks like it is changing market structure on the low time frame, should maybe lead to a move higher. This level should hold. And instead the market completely reverses course through that level. This clearly has to be very bearish now. So both times that happened, you had significant absorption at the lows, followed by, it's not followed by, it was during this period, you had a very significant increase in open interest. So again, the velocity of open interest into that level was pretty obvious that all of this took place in a very short amount of time. And it was that wasn't what I was going for. It was very aggressive. So again, breakthrough market structure locally. It's kind of like what happened back here too, right? Low time frames. No, that didn't involve the same. I'm looking at, I'm getting confused with the little fractals. So again, break below market structure should be a bullish move. This has to be bearish, right? So a lot of people get crowded in this region. that's the reason why I'm starting to build a long position. So as I mentioned earlier in the stream, I actually ended up longing as close as I could during that, right after that flush. And it happened very quickly. So, I mean, I didn't get the most attractive fill in terms of, I ended up slipping. I should have just placed a limit because there's probably that people would have panicked right into it, but I just wanted to tag on a position. So we have a slight delta divergence now. So you could see, sorry for going back to that other one before, I kind of skipped. I was from here and then I went back to TradingView. Price stuck within a micro range now. You have delta continuing to move lower, right? And the last time that this happened, we had delta, excuse me, I had a phone call. Delta continuing to move lower and the spot market beginning to lift up. So I am anticipating that something like that is going to take place, because you could see that as we're moving sideways, as we have this delta divergence beginning to form, open interest is really beginning to pick up. And it's picking up to the effect of, or to the tune of, around 10K BTC, which is, I mean, what is that? Like $280 million at this point. So let's double check that math. 10,000 BTC. I mean, oh shit, that would be really easy math, because it's just 10 times 36. Okay, so we'll put that in USD value. Now, mind you, this is on Bybit, FTX, and Binance alone. So we're looking at, 5.65 billion to 6 billion. So yeah, around 350 billion. So that's a very big increase for what looks like a trap setting up. Now, I think that no matter what, we're going to have, I think we're going to at least look to tap the underside of the structure again. And mind you, I think we probably get more from that, because the last time we had an increase of this magnitude, going back to this breakdown down here, it was from 81K to the lows, we'll say to this low down here, around 88. So that's, let's just ballpark it, 7.5, so 7,500 BTC. So that's less than where we are right now in terms of an increase in open interest. So the squeeze that resulted from here took us just from that alone, right? Just from that point, I'm saying, you had at least a 3% bounce. So just trying to ballpark what you'd expect from an unwind, right? If there's shorts are going to cover from here, if this is a trap setup, what my point is, I don't want to exit a position too early when there could be a lot more follow through. And what has been happening lately, right? What has been happening lately is the market looks like it's going to trend in one direction. There's a trap that sets up, the market gets very crowded, and then we completely recover that previous imbalance. Right? So remember, the last structure that we had was very similar to this. Again, going back to, this was on April 26th. So if we look at just profiles, hold on one sec, that's the wrong screen. Is it switched now? Was it top right? But it should be top left. Very weird. Huh. What I'll do is I'll just move this over. There we go. Okay, now I gotta move my Streamlabs. Get that off the other screen. Okay, so here's our double distribution, right? Really inefficient move. All the way down, and on this exchange, we're just looking at Bybit, so this is Bybit's TPO. But all the way down, there's no testing of any shorts. Right? It's a very one-sided move, no reversal during the structure, and what I mean by that is shorts weren't challenged. So anyone who has been shorting throughout the structure, if you started shorting in this leg, there's no real great area to invalidate your trade besides break even. So if the market starts recovering into this ledge, and the same thing happened back here, so this was a ledge, whereas this is a complete inefficiency. You could call the ledge right around 37.3. If we start recovering and trading back within this region, it's what? Very likely at least we cover the halfway point. And if it does what it's done, if it does what it has continued to do for the last couple months, it'll trade all the way back up to the high. So honestly, for myself, I'm building a long down here. I've only tagged on around half of the position. But I don't want to, my point is, if you're trying to look at not if you're trying, but what you should look at previous increases or similar periods of activity to get an idea of what you should expect from the move, so you don't end up like, let's say, you're like myself and you're longing down here, so that you don't end up closing out too early, right? I don't want to close this out for a scalp if the amount of fuel behind this can take us, 300-400 basis points higher. And I don't want to close this out for, a couple $100 move. So that's something to be mindful of. One, what has happened more recently? What has been sort of the predominant case for the last couple of months? Well, it's been that we've been ranging and we've been looking like we're about to trend, only to completely reverse. This would be the first time that the market trended in a long time if we were to continue down. We would have to go all the way back to, we don't have a trend. This is the latest trend, or the more recent trend from, the 45 region down to lows again. But it began to really chop and form more of a range, even though it's downward favoring than anything else. But the bigger picture still, right? Bigger picture still range. So I'm anticipating that in a range, I've said this in the past, if you have multiple standard deviation moves within the range that don't leave the range, it's probably a move that's worth fading. I think this was in the notes. No, this was in 2 streams ago. I talked about this, and this was the stream that a lot of people were using to write me a mock-up for the chance to write the stream summaries. But I had mentioned, if you have a multiple standard deviation move, multiple ATR, right? Any kind of multiple of what is normal volume for any lower time frame rotation, it's probably worth fading if you're still within the range. If it occurs outside of a range, if it breaks us through a range, or rather, breaks through a range high or breaks through a range low, that might signify a change. But think about it the way you think about Doge pumps in a bear market. Doge pumps in a bear market, you treat it differently than you treat it when it pumps in a bull market. So the point is, a move that is of this magnitude has been, in the last couple of months, worth fading because it's recovered in the past. Does everyone follow along with this? So that is our monthly 1 sec. Here we go. So we have a double distribution structure right now, and the trade that's on the table, let's say that you're just trading purely off of price action and TPO, you have a delta divergence at the lows, right? We see that there's absorption at the lows so far. It shouldn't be too hard to figure out why, right? This is a sort of panic-inducing candle because it broke down through a structure that, leading up to this, it seemed like the market was bullish, right? So it completely reversed through the structure, cut through it like butter. So the first sort of, I guess you would call it first order thinking, would be this has to be bearish, has to lead to an uglier move. And all these have done is completely unwind it back in the opposite direction. So we have a double distribution, which means we have a double distribution reversal on the table. So the single prints are where you would want to get involved. And I'll go back to TPO because it's easier to use that. That setup, if you're a lower time frame trader, if you're looking for something more intraday, it could involve a retest of these lows that leaves more excess. If so long as we still continue to see signs of absorption, right, it could involve something like this. You have more excess, trade back within this higher volume region, and we continue to base out. We already have excess at the lows, so that's a good sign so far. It's not like we're calling for absorption and a double it's a tongue twister, a double distribution reversal without a tail. We have a tail, so that's a good sign. Or trading back above and holding something like 37.3. So sold and hold, right? Trade back above 37.3. Sellers come in and try to walk this down. We're able to hold this level. I would anticipate filling out at least the gap from 37.3 to 38, this single print region. The idea is pretty simple. There's a lot of shorts that were rewarded, dry mouth, rewarded in the structure. They have not been tested yet. You can imagine that there's a lot of inefficient entries within here, right? It's not like there's it's not like there's really any periods in that structure, or areas within that structure rather, where you can really cleanly define a position. I mean, it's drift all the way down. So my point is, if you were shorting a trending move, a lot of times, you have someone that might trade some kind of a sweep of a high if we're consolidating on the way down, and then you can imagine, all right, maybe this is an area where there's an invalidation, there might be a cluster of stops to take, and maybe price does move back up, but maybe it wicks up into this region and that's it. Instead, the entire way down, you have a gap, right? So that's what it is. It's just a vacuum. Single prints within this entire structure. The idea is if we trade back above 37.3, I mean, honestly, we should trade back up to 38.8 even pretty quickly. I don't see a situation where if we start trading back above these lows, we don't actually just trade back all the way up to, I don't want to say just to the highs, but somewhere closer to this week's value, this week's point of control and value area high. So to take today's profiles off, here's weekly value. 37.3 is the double distribution reversal setup if you're playing towards the high, right? If you're going to be entering higher than where we are now. And my point is that I think you could get an extended move back up to this region right here, which is right around 38.7, 38.8, somewhere in that region. But we'll see. That setup, I'm getting involved earlier because I think that we have the absorption. I think we have the signs of absorption building up. Let me just check on the chat. Ticks for TPO 50. Yeah, 17 bidding is he's a great writer. He's done a great job so far. The last stream summary is phenomenal. So as far as alts go, so again, open interest is, let's see if we get a push down and open interest changes. I would be suspicious if we push down and now we start to see open interest drop, and that might mean that all of this is, again, people thinking like me and getting long. But I'm willing to hold on to this. It does help when you see something like Bitfinex getting filled, right? You have a nice spoofer though. Sitting right above us at 37 with 800 BTC. As far as alts go, I'm in and out of positions, like I said, all the time. So I shared AVAX. I said AVAX might be a good long if we have, a situation where BTC and ETH continue up. So as you can imagine, that's completely off the table. During FOMC, when I was scalping BTC, I actually ended up taking a couple scalps on AVAX, but I can't see holding any positions. Right now, as far as alts. The only thing that I ended up tagging on a position in and haven't really messed around with because it's kind of a liquid is Synapse. And we're actually sitting right above my entry right now. So, but this has been back and forth. It just, I don't want to I don't want to TA this because it's just, there's a lot more that's involved with this than TA, obviously. But I was pointing out, this was yesterday, the day before, that this looks like a very significant funnel building. And if we end up holding to the upside, your extension is at least, I think, the highs that are put in so far. So in that 450 region. But this is something I don't want to overly manage. I actually ended up, Flood reached out to me for, he had asked me a question, and he had asked if I was in Synapse, and I don't know a whole lot about alts from an FA standpoint. I talk about this all the time. But he mentioned that there's no VCs, there's no unlockers, so I figured out what the hell. A lot of people that are smart or bullish on it, why don't I build possibly a longer term position, which for me just means initially just tagging something on so that I actually pay attention to it. If I don't put on a position, I can completely forget about something that I have intention to get filled in. So I always talk about filling a starter position for that reason, because it makes me pay attention. Now, it obviously has to be there has to be other reasons for me to put a starter on. It has to look decent. But as far as all other alts go, we saw some leading out of the gate yesterday with BTC, but they were just trading like beta would, right? So trading like higher beta to BTC. ETH is holding up against BTC, but this could just be we could see these things change very quickly. Although, we have the merge that is a few months ahead of us. There's a lot of bullish narrative around that. I don't know what that's going to mean. I mean, it's possible that a good amount of that is priced in. Although with crypto, we see that nothing is really ever priced in completely. But I don't know, guys. There's not a whole lot that I have for you. I gave my reasoning as to why I think that this might be a good area to get long again after that flush. I knew there was a good reason to not buy it before the flush. So now we have the flush. We have signs of absorption. And again, we're right back to the lows of what has been our range for this year. So what I had on the chart previously, this is yearly VWAP. And we're just at the value. You could think of this as the value area low for this year, those standard deviation bands. And again, lowest weekly close is, we flush that and we're sitting back above it. It might be the case that, it has been the case that what looks like is going to be a trending move ends up just continuing to chop and range. So the move that, even if we get a breakthrough this low, I don't know if this market's going to really reward one side for long, right? I mean, I talk about this low in the last stream and talked about how if we accept into these lows that it's probably not just stopping at 30, at this low right here, right? I ended up saying that it's probably coming back down to like 28, 29 region. Could it come back down to there over time and take a while to chop all the way through? I mean, if anything is the case, it's that things have been doing that more than moving swiftly in one direction, unless we go back into this structure. So the trouble is that, we're in a range, but we're also in a much larger range. So there's really and this goes back to the last stream. I said the most significant levels on this chart from a contextual risk reward standpoint, we're closer to 1 right now, which is the lows, but it's those levels, right? The oh shit level that I mentioned is down here. And then clearly the balls to the wall bulls level is all the way back at the highs. Now, some people will wait for that because it's the cost of doing business for that certainty. But, I think that, again, I think we're going to continue to, I don't see the market changing what it's doing in the near future. And I said this in the last stream. I said, if anything, we might have some kind of short-term relief, some kind of short-term trend that we could take advantage of that would maybe last a couple of days or a week, or a couple of weeks, right? So nothing that is groundbreaking, nothing that is going to be changing, much for us on the high time frame. So point being, avoid and ignore anybody who's talking about an all-time high in the next couple of months. I just don't see why that would happen. And to be honest, if you just look at how long it's taken us to move off of this high, what direction it looks like we're favoring, even a couple months, right? Let's say a couple months from now. So we're talking June, July, let's go to August 1st. Do you think that the market is going to make an all-time high by the end of the summer? Right, so the end of the summer is, I'm thinking incorrectly, is in September. So I don't know. I don't see the market making an all-time high, honestly, this year. If anything, I think that based on how prices have moved and just the pace and responsiveness to, so we had, for example, we had what is perceived as a bullish piece of news yesterday with respect to the 75 basis points not being on the table. So that gave us some upside, but it's not big enough, right? The major overarching theme, and I've said this for 5 months now, is this year is going to be shitty because we don't have an accommodative Fed. So just because the Fed isn't hitting us in the head with a sledgehammer and is using a bat instead, doesn't mean that things are going to be, they're going to switch to being very bullish again. Maybe that wasn't the best comparison, but what I'm trying to instill is that they're still there. QT is still taking place. It's not off the table, and they're still raising rates, right? And we're not at the target yet. So this is what the environment looks like when you don't have an accommodative Fed for all risk assets. The sign that I think will be worth paying attention to is, one, if the Fed just completely pivots, right? Let's say that something in the market breaks, something with respect to credit, or something that clearly we can't foresee now, because black swans are not things that you get to really think of before they happen, right? They always catch 99.9999% participants offside or out of the blue. But let's say that something breaks and they have to resume QE. Let's say that we get to a point where inflation starts coming down, and they say that they're going to stop selling bonds, right? That could be one thing. There are a few things that might be communicated by the Fed that are pretty explicit that probably would warrant a very long duration move. I don't mean long duration like long duration asset, even though Bitcoin is a long duration asset. I just mean a trend that would be lasting. But without these, right, as long as there's still QT is still taking place, this is what's going to be the norm. So we're lucky if we get short periods of activity. And it sucks because yesterday it felt like we were maybe going to get something that had legs. Long position right now. I refilled along, and the S&P, let's take a look at this. And it'll take questions. So that weekly candle looked a lot better yesterday, right? But still, holding the lows that we need to hold. We're 13% off the highs right now, right? Up closer to 14. I don't think the 20% level in the past has been the level where the Fed would probably be pulling off the gas in terms of QT, or, I mean, you can't say that because it's a completely different context, but 20% in the past is kind of Fed put territory. But we'll see. I mean, I mentioned from 38 down to 35 or 34 as an area that I would look, right? And that had to do with, we were looking at monthly and quarterly profiles from a point of control standpoint, where a ton of activity took place in the past. So we're looking at right around, this is 39, excuse me. Let me go further down. Oh, this is, what am I looking at? We're looking at, okay, that is the quarterly, just making sure. Further down, 36. I think that those are good targets, right? 38 down to 35. But my point of saying that was the Fed put, I don't think, is there. That's what I meant to say, excuse me. The Fed put, I don't think, is there. So I don't think the Fed is going to be suddenly changing course at an area where they have been in the past, just because we have a different situation right now with inflation. Depends on, if we see, what the next CPI is, for example. 10-year was ripping today. Dollar was recovering today. Oil was up today. So we're back to the point where we were before FOMC. And I said this many times in the past, but I've said it with more certainty about where we were in the structure, because that's what your brain wants to do, right? It wants to find sort of the perfect looking fractal. And finding fractals looking at a chart is extremely easy to do, and that's why it's misleading. You're only looking at things that are made of 4 data points, and they all look the same, whether you're looking at a 5-minute chart or a weekly chart. But what I had mentioned countless times is this being this, and this being what we could anticipate. And I never really knew what part of this we were at, right? Because at times it looked like maybe we were, further along. But if anything, if we go from, let's just say, here to finish, to break of that high, we have 72 bars. If we consider the high to a break of that, I mean, that does put us within this year. But that's the initial move. That's if you're trying to make this look in a sort of similar fractal fashion. But we had an all-time high. It's tough, right? Just trying to find sort of symmetry between previous structures. Maybe it puts us over here if you consider this all-time high, even though this structure as a whole looks more like what took place here. So, but all right, guys, I think I'm going to wrap it up. I have to cut this one short. I actually didn't realize that I could hear now. There is a contractor here. So they were supposed to be here after 2:30, but it is 2 p.m. and they're here on the dot. So I think you guys get the idea, though, right? And if anything, 17 Bidding will do a great job of summarizing all of this stuff for you guys. That'll be it.